All right, guys. Yeah, this is another backtesting video. I think I'm going to backtest also. This pair is a trade I took last week. This week just passed. So it's one of those trades that I took and it hit profit. And so I think I posted the profits on my Instagram page. I think so. Either Instagram or TikTok. Therefore, guys, yeah, let me announce this. I have also opened the TikTok page for this platform for Josh FX Pro. Okay. So do well to also follow my TikTok page and let's also grow together. All right. So I'll do this. Yes. So this is the pair. From daily perspective, this is the pair that we took last week. This pair, if I held this pair, I would have cashed out like big time. So, but let me show you why the pair moved and what I saw for me to move this pair. All right. So first of all, on a daily time frame, I had to map out for all the zones, all the trading zones, all the um, support and resistance zones, all the supply and demand zones. I had to map out for everything. All right. So we had this zone mapped out, we had this zone mapped out, and it's a trending market. It's in an uptrend. So if you notice, market has been giving consecutive highs and lows upward, right? So the overall structure is uptrend. The overall structure of the market is uptrend. So at this point, before this point started, we had market shift above this point. So we had market break a high. I've always said this. If you want to know which high is more important or is important, when a high makes a low, breaks a low, that high is important, right? Because if market comes back to break it, that is the original. So if you have a high like this, right? This is not a high. It's not the overall high. If market breaks this, this could just be maybe a liquidity and market comes back to somewhere here before this high and drops way down. So if you are looking at buying this market all the way from here, when market does this, you will say, okay, this, because it has broken here, it is now a bullish market. No, make sure the high that is being broken has to be the one that broke off a low, right? Make sure if you want to pick a change of character high or low, make sure it's the one that's caused a break of structure, right? So having that in mind, let's continue. So we had this high here, right? Now, why would I say this high? Because it broke a high, and this high actually broke a low. It caused a change of character, a break of structure. When market gave this low, came here, gave a high, then gave this low. If you notice, this low is even lower than this low. So it broke this low. As per this low, breaking all these points, it broke this high. This low here caused a break of structure of these points. So this low indicated the bullish move. But then we had this high here that broke below that low, indicating that now market is still selling, right? But we are in a zone. This is a zone, a support resistance zone. So it's critical. We are not here. We are here. We're looking for what happened here. So when we saw this market has already broken above this high that broke below this low. So the change of character was here, and now the change of character became here because of between these points, this high broke down this point. So we had a trending range between here and here. So if market goes above here, market is now bullish. So because of the effect of this, I'll put a line there. Because of the effect of this here, because of the effect of this, oosh, I missed it. Omo, let me just go and copy this thing. I don't want this video to be too long. All right, because of the effect of this break here, market became an uptrend. This is why you see that I put my daily trading range between this point and this point. This point was the highest market got to on body before a body or so, before it started retracing back down. Okay, that was the highest. So now we are looking at market between here and here. We're now going to look out for, break it down to a lower time frame to look out for fair value gap, areas of interest, and all whatnot. Okay, so this is where we at. We are here. So on a 4 hours other block that we had would be this other block here. Although remember, I always say if the other block lap, I would always want to prefer this other block than this other block. But then it's always good to mark both out, because sometimes market may not get to the low of this other block before it to take off. It may actually respect this one before taking off. So it's always good to map it out so that if market is taking this one as liquidity, it won't take this one. All right. So let's draw it out. It's green. So it's a 4 hours order block. It's sounding as if it's going to rain, but regardless, let's see how it goes. So remember the rule, right? The rule is, oh shit, I didn't even put it here. I didn't put it here. Where's that stuff? Where's that stuff? Where's my, yeah. Let me put it here. So copy. Yep. I'll try and, well, okay, so this is the rule. The rule is, if markets, after making this break of structure point or change of character points, from where it's coming down from, if after breaking the first break of structure point, if it creates trends to that place, to the order block or fair value gap, then wait for a break of structure before you start trading to the direction, right? That was, or rather, that is the rule. Okay, so, and if you remember, there's a trade that I took this week. I think that was a VIX 10 1S. It gave me, after all this, I saw all the break of structure to that point. It did a trend. It trended down to the point. It trended down. This is a trend, right? This is also a break here. When I talk about trend, you already know what it is. I don't want to go into breaking down what trends are. But I would I'll post a video, a kind of an academic video on trending markets, okay? Just to educate some of us who are still learning the markets, learning, who wants to know more about Forex, all right? I'll tell you some things that if you go to some Forex Academy, you'd have to pay for to learn. I will give you some informations there that you'd learn and you master the art of trading. All right, so now market trended there. If you notice, market trended. It came here before, partially mitigated it, came back here. But the reason why I didn't take this one was because there was a trend. You see how market trended to that point. It trended there. Even came here now. This is why on a norm, if you didn't trend here, a lot of people will look to buy this because this is a morning star. You look to buy this market, put your stop below here, and market will still take you out. Even if you had put your stop on this half of the other block of 4 hours, market will still come there to take you out. To see what happened here. So, but because of this rule that I put here, if there's a trending structure to the other block of fair value gap zone, wait for a break of structure. So there is a trending structure. It trended, it broke a structure, broke a structure. That was a trending structure to that place. So you would have to wait for a break of structure pattern to take the trade. And in this case, we saw 3 times market tapped on the other block of 4 hours. 3 times. 3 times market tapped. I want this thing to be big. I want it to be okay. Yeah, 3 times market tapped on the other block of 4 hours. The first time it came there, second time it came there. Remember our rule. If there are 2 to 3 rejection confirmations, then that's it. So we had 3 complete rejection confirmations, 1, 2, and 3. The third one was what now gave us a clear break of structure. At this point, the high was here, which we didn't see a break of structure. This was the high. There was no break of structure on this high. Market didn't break it. If you notice, market didn't break it. Now we had another high here. We had another high which market created here. And this was the high that market finally took out. This was the high that market finally took out. So you could have wanted to enter this trade on a higher time frame, on a 4-hour time frame. It's still perfect. If you had seen this 1, 2, 3 rejection and this what do you call this? Harami or Morningstar, however you say it, but yeah, it caused the candlestick reversal pattern caused a break of structure, right? Closed above. So if you had seen this move, this would have been a perfect place to enter the trade to buy the market. This would have been a perfect place to jump in on this trade here. Yeah, to buy the market, okay? And you would have been up about, let's just say if you put your stop here below this point, it would have been up about, at this point it was already 1:3. Around 1:3, I think. Okay, not yet, but then yeah, around 1:3. So, but at this point, overall now, market did a 1:4 point something. But okay, so but if you're not entering here, you would also consider getting in, because since the break has been formed, now is an uptrend, right? Since the break has been formed, now is an uptrend. It broke above this one. This one caused a downtrend, right? So this was where the change of character would be from. Since there's a break above that point, your trading range will be between here. Let me put this thing as a line, not dotted. What do I do? What do I do? Okay, I'll just use the same one. Yeah. Your trading range will be between these points, yeah, and this point where it broke. Where it broke from, let me copy this, clone this. And this point where the high came before the retest, forget my mouth, before the retest, okay? So now we had this. If you wanted to take this trade, this is what you would have seen to take this trade. This trade was awesome, man. This trade was awesome. I took this trade and I even took it from this point where I'm about to show you right now. I took it from this point. I didn't take it from the 4 hours. I took it from this 1 hour time frame. So when we had this break, this was the break that we had, right? Market gave this full highs, right? Full range. So if you're looking at it on the 1 hour time frame, we have a range and we know it's buy we're expecting. Now, what do? We map out our, before the break of structure, this was the break of structure point, right? Let's just say, let me put it on the week just for the sake of those who like putting their break of structure points on the week instead of the body, right? So before this break of structure points, if you look how far this line goes, let me put it here. If you look how far this line goes, before this break of structure point, we had an order block here. So we're looking for area of interest between here and here, right? So we had another block before the break of structure, which is this one here. And if you notice, there was no much fair value gaps. There was no much fair value gaps. This was another block on 1 hour. Did I map out? Okay, yeah, this one was on 4 hours here. So after this stuff, we had this other block. Forgive my structure, the way I'm drawing this thing, man. I'm just trying to get it perfect. Okay, so yeah. So market came, we tested, this was where we cut our high from, right? So already there has been an inducement or partial mitigation of the 1 hour order block. So market came, took out that place as the, what do you call it, as the liquidity, right? When came straight to the point, remember the rule. The first rule is when it breaks the first break of structure, going back to the fair value gap and go straight to the order block of fair value gap without trending there, then trade the first reversal pattern that took off. So this actually broke this structure, but came down to this point straight. We didn't see like there was no trend kind of thing down to this point. It just came down straight there and rejected back off again, back off the other block. You get it just rejected back off the other block, and this was what we had. This was where the trade would have been. This is a tweezer bottom. If you are familiar with this candlestick pair, it's a tweezer bottom. If you follow me on my chart on my YouTube page, you will see that this trade, I actually took this trade. I think I did 1:2. This was I took it to this point, 1:2, 1:3. I think so. I took it to, where was that? I think it was the point of 4 hours. Let me see, 4 hours. Yeah, I took it to this. Was it here? No. I think it was here. No, 1:6. Yes, I did 1:6. Around 1:6, 1:5. I can't remember, but I did 1:6, 1:5. So it was around here because this was like the overall high. You get, this was the daily trading high or trading range, the high of it. So I knew that market has shifted structure and is going to buy. But I was saying, man, if I had held this thing, can you imagine how far this thing had gone? This thing did a total of, this was where it started consolidating at first. This was 1:11. And at this point, at this high, I was already up 9K. You get, I was already up 9K. So, but if I had even held it to this point before the whole retracement and all, this was already 1:12. This now market has done up to 1:21. So if at 1:5, if 5, I was already up 9K, then 10 would have been 10K. Let's just say 18K. I don't know how much that is. These figures are, man. So if, let me do a quick math. 10 would have been 18. It would have been like times 4. Yeah, this is 5 and 20. So it would have been like times 4. It would have been 9 times 4. I would have been as high as 36,000 on this pair. I would have been as high as 36,000 on this pair. But I like to always take my target and leave, right? This would have been another great, good high to take a trade from. This would have been another good high. If you check on the daily, yeah. This would have been another good high. If my trade was somewhere around here, this was like 1:14. That would have been another very good high here. So, but regardless, I took my trade where I took the profit where I wanted to take it, and I'm out. So, seeing this, I hope you caught the strategy. I hope you these backtest videos are actually great for you. I also do go back to watch these backtest videos because even me, I'm not a robot. I go back to relearn on these things to remind myself of stuffs that I've already learned and the things that keep working over time, that keep working and working and working. So please do well to keep your strategy on point. Do well to keep working. Always show up. Always show up. You don't know. Some days I wake up by 5 a.m. Some days I stay awake from morning from 1 a.m. till 3, 2, 3, 4, 5 a.m. just to catch a trade, just to wait for a trade to be ready. Like I stay all night until I'll be in my office and I'll see the day brighten up. It's that crazy, man. So, but it's good, right? Just keep showing up. Don't, if you have a bad day, it's just a bad day, not a bad week, right? Even if you had a bad week, it's just a bad week, not a bad month. So the next week might come out profitable, it might give you. So, but what I do mostly is, you see the way I mapped out the whole week. Once I pick a trade for the week, whether it's on Monday, I saw that trade, or Tuesday or Wednesday, bro, I'm going in, right? Just one entry per week. Take your one slot per week, risk all you can risk, and you're out, and you're done for the week. So that's just what I do. That's just the main thing. All right. So this is VIX 25 1x index, and see you guys on the next video. So subscribe, do well to subscribe, do well to like, do well to drop your comments, turn on your bell notification to know when next I'll drop the next video. Okay. So see you guys and have a great weekend. Bye-bye.